Hi everyone, I have another exciting announcement for you guys. For our subscribers, we're hosting a Steady Drinks with Steady Lads event in Singapore for Token 2049. The event is taking place on September 17th from 4:30 p.m. to 6:30 p.m. local time. The link to register is in the description below, and we look forward to seeing you there. Thanks.
Welcome. I hope everybody's doing okay out there. It's the first week of September, notoriously choppy month for crypto, and seems like this week has started quite like the previous years as well. So guys, I'm in Korea. This is Blockchain Week, Korea Blockchain Week. We can talk a little bit about that. There's been some funny stuff going on here, of course. Lots to talk about in the market, and I think people will enjoy this episode. We're gonna try, we said, to like not make it a cope episode. It'll be half cope, half optimistic, and we got different optimistic takes to get into. So hopefully it'll be enjoyable.
Yeah. So what's your experience been like, Jordi? Is it anything like we're seeing on Twitter here?
Yeah, I'm trying not to drink right now, so I'm not going hard like these guys. I'm in a little bit of a health binge. I saw Ledger from Up Only. He's trying to do pull-ups and push-ups and whatever else. I'm like, yes. I just messaged him. I'm like, we're doing this. We're gonna get through this in a healthy way instead of drinking our. Yeah, there we go.
I've been working out recently the past 2 months. I never work out, but I've been going to the gym like 3 times a week. I feel better about myself.
See, women focus on getting your hot summer bod, right? Like it's hot girl summer. For us, like in the bear market or when things are looking down a bit, we got to focus on our health so that when the bull market comes, we're just ready to go in top shape.
Yeah.
And then and if we live unhealthy lives, then at least we worked out during the bear market.
Keiji, what has prompted this? I mean, you're getting married already. You don't need to like get the girl.
Yeah, let yourself go.
What's driving this?
I feel like I've let myself go for like the past year or two, and I feel like my beer belly has gone noticeably big, and I love eating I love drinking beer, fries, fried chicken, so it's just like a way for me to, I guess, compensate for my unhealthy appetite, essentially.
Very respectful.
Been farming Blackbird too much, Taiki?
Yeah. I've actually been like walking. I've been going on like hour-long walks, like a couple times a week, to a Blackbird location, just so I can get my steps in. And also, I think for the airdrop, you need to spend your tokens to increase your size. So, I'm reaching for anything. Like the farmers, we're hunting for scraps right now. It's pretty difficult out there.
Yeah, let's go through CoinGecko just quickly to see the destruction happening. We do have these frequent we're so back, we're so over, it's so back, we're so over rotations in every couple of days. But we can see on the weekly here that, Bitcoin 6.5% down, Ethereum 7.8%. And I think this is what's cracked people the most on the vibes is Solana's down 11% now. It does seem that, the honeymoon period there is over. So there's not many places to hide, really, if you look at the assets. Obviously, TON, which was another huge performer, is having its challenges at the moment that it needs to overcome. We can look at TradFi quickly as well, because a lot of this latest leg is driven a little bit by the double dip here that we're having in the NASDAQ. So we can see the whole 6 months is getting pretty flat. It's only 3% up. Macro is kind of becoming relevant again, it does feel like. And everybody that I'm meeting at KBW, it's surprising the number of people talking about the Fed rate cuts coming next week and how the market's going to react to those.
I wanted to ask you, like, the NASDAQ has certainly chopped around a bit, but people love saying this is like summer chop for crypto. It's a choppy market, but I was sort of looking at things. Is it really chop or is it just a down market? Why do people have this fascination with saying chop as opposed to just admitting that we've gone down quite a bit?
I mean, Awawat was kind of posting that 63K, and then like 2 months later he would quote tweet 63K and then quote tweet 63K, because it seems like we're kind of like oscillating around 63K one way or another. We're still within range of getting back to 63K potentially. So hopefully it's a choppy market. That's the optimistic take. It does feel like the other thing that everyone is saying is, and we'll get into this a little bit more deeply, but they're saying that Trump is really the hope, which is insane that, 4 years after he came out of office, now he is the single golden hope for the whole industry.
Yeah, we're desperate out here. But his odds have increased recently, right?
They have
At least in the
increased.
poly market.
Let's bring it up. I think the little Kamala honeymoon is over, and let's see how the debate goes. But it could be a big turning point for Trump if he does well in the debate. It's all up to him now. 53-46, I would say, is not too bad. Justin, you were kind of thinking that Pennsylvania will have an outsized influence.
Yeah, I personally think these models are wrong. Actually, right now, my model has this basically flipped. So Trump at 45%, Harris at 55%. I think it all comes down to Pennsylvania this year. And I personally am not aligned with sort of this Nate Silver understanding of how Pennsylvania is going to go, and also the 46% chance in Pennsylvania. Really interesting. You can see the Pennsylvania odds are almost the exact odds for the election, because it really all is going to come down there. And I think Pennsylvania goes Kamala, but I think that could all change. This week is a big week for polling data. And then, of course, we have the debate coming up. Is it next week or the following? I think it's next week, actually, which should be a big moment. Yeah.
So you don't think that 538 is accurate? You think you have a better understanding of the Philadelphian situation?
That's what my model is showing, but we'll see how it plays
What
out.
is your model?
Me and Taiki are trying to keep a straight face here.
It's a mental model.
Justin model.
It's a mental model.
But is Trump the savior, though? Because his odds have gone up, and this is just Bitcoin, but Bitcoin has gone down, right? And it seems like I do agree with the sentiment that Trump is going to save our shit coins, give us regulatory clarity. Like, that makes sense, but the market is not necessarily positioning that way, right?
Well, up 3% or 4% is not going to drastically affect asset prices. It has to be like a huge swing to really get into people's heads and become the main narrative. But just to wrap up this segment, everybody, so we have Ansem is black GCR, and then we have Fiki or Suzu, depending on your flavor, is the Asian GCR. And, Justin is the Philadelphia GCR. So if you ever need to understand Philadelphia, just follow Justin. We'll get all the insights there. I know, Justin, you've been looking at World Liberty Fi, and Nick Carter has had some concerns. This is the Trump project that has been long promised. It is not a meme coin. Maybe that's good. It is a DeFi project. We are being told it is an Aave front end of sorts. What can you tell us, Justin?
Yeah, I think Taiki is probably best equipped to talk about how the project works. It looks like it's built on Aave, and Taiki, maybe you can share more there while I pull up some screenshots of how the app looks, and then we can transition to Nick Carter's tweet on how can we stop this.
I forgot that Taiki is Aave GCR. So let's go to Aave GCR.
Taiki is the Aave specialist.
No, I'm mid-curve GCR. Or hopefully DeFi GCR, but DeFi GCR is synonymous with mid-curve GCR. But yeah, to my understanding, World Liberty Fi is just a front end for Aave. So if someone puts 100K into like this Trump project, then it just goes to Aave. So they're not really building anything new. Maybe they'll add fees on top, they'll add tokens on top, but they're just literally using Aave as a front end, and maybe they'll list new assets. Maybe I heard that these guys are talking to Stani and like the Avara Corporation. So I have no idea what's going to happen there. Before you make fun of like whatever, but I actually talked to the advisor, and he's hopeful, right? He says he's trying to build something of like value and have it be legit. So at least he's not launching a meme coin, right? I think we're all tired of that.
I completely disagree. I'll share Nick Carter's tweet in a second, but I just want to point out there is some hope. This project is by the esteemed founder behind Date Hotter Girls LLC. So really, there's some innovative minds here. I mean, it is ridiculous, right? Like Doe Finance was a legitimate project, but why work with those founders? Their project was hacked and never really found product market fit. I mean, these are some of the most powerful people in the country. You would think they could be working with, some better developers. I also think it's interesting they're doing a private sale. So I think about 60 to 70% of the tokens are held by insiders, and then the rest are going to be sold via public sale. And you can actually see here, this is what the app is said to look like from the now deleted GitHub, right? So it's very simple front end, looks exactly like Doe, and not seeing much innovation here. So I am sort of aligned with Nick Carter that I think this is bad for Trump. It's probably bad for our industry, and I don't think this is really adding much value.
Yeah. Let's get a few more like details before we judge it. I'm kind of open-minded. It does look like they're doing a lot of legal work. Maybe there's a way that this will be a more like legally compliant app to use. And Justin, I don't know what's your problem with dating hotter girls LLC. I mean, we talk about we need better marketing and like better outreach. That seems to be in normie territory right there.
We've had Robert Leshner on. I think Robert Leshner would be a better builder for this than the founder of Date Hotter Girls LLC and Doe Finance, for example. Not that Robert is open for business, but here's Nick's tweet, and Nick Carter, I think, is more on the conservative side. I don't want to speak for him. So it's not as though he's like an anti-Trumper, an orange man bad, or Trump derangement syndrome guy. But he says, is there anything we can do as crypto Twitter to actually stop this? I think it, one, generally damages Trump's electoral prospects if it gets hacked, just like the previous app did. It's an obvious target for the SEC. At best, it's a distraction, and at worst, it's a huge source of embarrassment. And I sort of disagree with this. I have nothing against him trying it. In fact, I think it's going to be fun. I'm going to probably participate in the public sale and participate in farming the app and using it because it's fun. But I don't think this is good for Trump. I don't think it's good for our industry. I think this is more akin to creating a meme coin or a meme project than it is to creating something with lasting value from everything we're seeing. I could be wrong, but if it's just a Doe Finance copy pasta, it seems like that's what it's going to be.
But I mean, if it's like a front end for Aave, it's not going to get hacked, right? And if Aave gets hacked, then the industry's fucked anyways. I think it's the exploit issue is not that big of a deal. I guess it's more so if the token launches at like a $10 billion valuation and goes to like $100 million market cap, then yeah, it just looks really bad for him. But I think the token is going to be non-transferable when they launch. So maybe they'll only let it trade after the election. So, if he gets elected and the token goes down only, it's like whatever. I don't really know what his plan is.
I mean, ultimately, like if they do the private sale and they can raise the money that they want, they don't need to let the token trade for a while. Like you said, it's probably easier to do it later. So you were saying, Justin, that, and Taiki, that you guys are happy it's not a meme coin. We've seen a lot of that. But apparently the fastest $100 million sprinter is Pump.fun. They are saying that in 217 days, okay, not 21 days, 217 days, they have $100 million in revenue. There's no token, so it's not like there's token incentives and farming. This is just pure revenue from, I guess, like gambling entertainment, you could call it, letting people just make their own meme coins and have fun with their friends that they're feeling like whales, on their like little coins. We have a list here. This is all the projects. Is this all of the projects? I mean, ENS, 1,600 days. So this was all the projects in the last 5 years, or ever, I guess, that have made 100 million in revenue. Some legit ones here, like DYDX, Maker, Lido.
I assume it's not counting layer ones and layer twos. I'm not sure if layer twos have hit this, but layer ones certainly have, right?
Yeah.
Yeah, this has applications, yeah.
Well, I think a couple things really stand out from this list. One is, to your point, the list isn't that long, which is interesting. But the other thing that's really interesting to me is a lot of these projects are not things we've seen not new projects from the last year, besides Pump.fun and Athena. So Convex is old, PancakeSwap is old, Aerodrome is somewhere in the middle, Curve is very old, Sushi, DYDX, Maker. It sort of goes down the list. It's very interesting to see
inflation too, right? It's like for PancakeSwap to hit $100 million revenue, I'm sure they gave out more than $100 million in token incentives. So it's less impressive than Pump.fun.
Convex, right? Like, what is Convex? It was just a sort of a little Ponzi on top of Curve. So ultimately, well, good Ponzi. It was a very good Ponzi. But of course, whenever something like this happens, we have all the copycats. So first we had Justin Sun, we have Sun Pump, and now there's like Ether Vista. And I know, Justin, you're quite into Cardano ecosystem. You seem to spend some time there. You were saying there's a Cardano pump fund?
Yeah, so in our doing some little exploration on chain, seeing what's out there, and there's a hot new project that just recently launched called Snek.fun, and this is the Pump.fun for Cardano, which is really interesting. So nice to see some innovative apps being built in the Cardano world. Shout out to Charles. And when we were perusing this,
your buddy Charles,
our buddy, he's our friend now.
Our buddy. What is the good coins? Oh wow, thick.
Yeah. So we're still trying to do some investigation to see if this is Thicky's coin on Cardano here. We can see there's a picture. I don't know if that's meant to represent him or just a fun picture of a very thick bear. But yeah, you can see there's a lot of fun coins to peruse here. A lot of innovation happening in Cardano world.
Yeah, it kind of makes sense. I mean, Thicky is a bear, and he must be eating well. So, and I feel like before we started recording this, I was showing Justin this website, and I think the market cap of Thick was like 30K ADA. So it's like 3x in like 30 minutes. I mean, this is clear product market fit. I don't even know how this works. I didn't even know like Cardano is.
And
usable.
I think we have a new king of the hill, right? Ada Dog is now the new king of the hill.
I don't know how that
Ada
works.
Dog.
I think you have to pay for
So
it.
creative.
It's very creative.
The creativity of this space never ceases to amaze me. You know, we have dogs on Telegram. We have Ada Dog. All right, guys. I mean, I remember last cycle when the NFTs were happening. My friends, like kids, were making NFTs and just as like a fun thing. And there were all the drawings they would put on the fridge. They were NFT tokens. This kind of feels like that quality. Like this is that type of thing.
Yeah. I wonder, part of me wonders if this is like, these are signals, it's the beginning of the end. I mean, even in Ethereum world, we were looking at in the pre-show as well, there's Ether Vista now, which haven't played around with it yet, but from my understanding, it's similar to Pump.fun, but built on Ethereum. And I sort of wonder as like the Pump.fun fork ecosystem expands and people realize that you're going to lose money if you do this most of the time, if this sort of like signals the beginning of the end. Because one thing I wanted to talk to you guys about, which I think we've touched on before, but never done a deep dive on, is that, and I sort of share this lingering theory that Pump.fun was actually value extracted from our space. And I think intuitively it sort of makes sense. So we looked at the chart before that 90% plus of people lose money. This person, Rane, says 95% of users lose money. And they leave the system, right? They got scammed. They exit the system. They don't want to play around in this casino anymore. And then the winners all cash out. And so it's like quite extractive. And yeah, I'm just wondering if maybe this is sort of the beginning of the end, seeing these forks pop up on Cardano, on Ethereum, etc. What do you guys think?
It's no different than a lot of other things like trading, exchanges. These are all extractive. Most of the trading firms, like Jump, Power, these kind of firms that have made billions and billions from trading, with a few exceptions, they don't keep the money that they make in BTC or ETH. They're just cashing it out to dollars. There are exceptions out there. So shout out to the firms that do build a balance sheet in crypto, the more crypto native firms. But there's a lot of much, much more numbers at 100 million, being extracted. Look at the Binance revenues. They are thankfully, to say something nice about Binance, they do seem to be, more buying than selling coins, altcoins and things in general. So apart from the $4 billion fine they had to pay, it seems like they keep a decent amount of crypto.
It's like instead of blaming these devs, it's like maybe you have to look inwards and maybe blame ourselves. So, like we're the ones buying these, we're the ones speculating, and we haven't built anything else as to like, the other.
We're trying though. I'm trying. It's hard.
Yeah, we're all trying.
We'll use this as a nice segue. So we had Travis Kling's previous post in the past about financial nihilism. We've mentioned it, and he has updated with a third piece here. And I think this one hit home to a lot of the builders in the space, like Justin here, saying it hit home. So saying that a lot of builders are quiet quitting, just like in the traditional world. A lot of people have lost purpose and they've made money and they feel trapped. Justin, maybe kind of start off, tell us what you thought resonated here.
Yeah, really, I'd recommend everyone read it. Really an interesting piece, and I think it's pretty directionally correct. But I think these two tweets here that we're going to talk about now really resonated the most. So Travis says, despite many becoming deeply disenfranchised with crypto fulfilling its potential, they stick around the space because time adjusted, risk adjusted, they still believe that this has the best returns. And I think there's something really interesting about that, right? Like, we don't have so much to show for ourselves for the past years of innovation and development. But that said, like, where else are you going to go? Tina, there is no alternative to staying in the crypto space. This is where the highest returns are. It's the fastest way money gets exchanged and value gets transferred. And so I think there is this, I don't know if they're golden handcuffs or maybe silver handcuffs, but there is this thing that keeps a lot of people here because they do think it's the best risk reward, but they've also become disenfranchised with what's being built. And Travis then goes on to talk about, let's say you're 30 and you had made 2 million in crypto for the last 5 years. That's a huge amount of money for most people. You'd be very grateful for that. But you're not really set for life, right? So what do you do now? You've made your 2 million in crypto. Are you going to leave the industry and go back to traditional tech, go back to TradFi? Probably not, right? After you've seen what's possible in crypto, seen how the returns are bananas, you're not going to leave, you're going to stay. And I think that's sort of what he's getting at, of people have quiet quit. They don't necessarily believe in what's happening and believe in what's being built, but there's nowhere else to go.
Right. Let's bring up one more tweet, the next one there, because this is kind of the key, I think, here is that he says crypto enthusiasts cannot see what is going to drive the next leg up. No DeFi summer, no NFT summer, gaming is dead on arrival, metaverse was a joke. Decentralized social media flatlined, hasn't continued like the initial surge. People are trying to get excited about crypto AI. He thinks the excitement is misplaced, at least thus far. And he likes, deep in, whatever. Not getting into like some of the specific sectors because like maybe AI does have more promise and, maybe SocialFi can get somewhere. But this is what I'm generally having a feeling from talking to people at conferences and talking to all the founders that I do. There's a lot of burnout. And I think, maybe Justin, you can understand what it comes from, where you're seeing that the legitimate things being trying to build that we assumed we're going to have users, we're going to have product market fit. It's not really there. And I think there's a couple things going on. One is we got a little bit tricked by the token values. And I'll repeat it one more time. Every company is making a token, and that's one product. And then they make their actual code product. And for a while, when things are pumping, it feels like the token product is a lot of product market fit because people are buying it. It's worth, billions of dollars in many cases. And that kind of makes this trick in our head. Well, an example would be Celestia, right? So there's a lot of super smart people behind it. Tech is fantastic. It does have a purpose. But in reality, the token was very hyped, went up to 20 billion. We've talked about it in the past. The revenue, I don't know if we're like a year in or like 6 months in, but the revenue that it can actually make as a DA layer seems to be like $60 or something like that. And, we're valuing $20 billion of FDV. So you can talk about how smart the team and the code, everything is, but in reality, we got a little bit tricked by the hype around the token and the airdrops and like you're going to get a new airdrop and dimension, all this stuff, rather than is there actual, a road to 100 million of revenue, and is that going to be overtaking the memes or not?
And if I can chime in, I mean, I know that at the beginning of the episode, we're going to do like half cope and half optimism. So I'll try to come in with the optimism. So I feel like, people are getting jaded, right? And people want to believe in something. I want to believe in something. You want to believe in something. The viewers want to believe in something. So I think, given where the sentiment's at and where everyone's headspace is, it actually can be like a launchpad for like older tokens that actually have product market fit to actually start doing well. And I'm not saying that they're going to like 100x or anything, but for example, like I'm the mid-curve DeFi GCR, right? It's like the Aave, right? Like Aave has 2x against ETH, from like 0.028 to like 0.056. I feel like that makes sense, right? And I feel like people can get behind that. And then if old coins that make sense or start to do well, then I think it can also, make people feel better about themselves. Like if you're a dev, right, just keep building. If you if your product is good, then eventually your token will have value. And then maybe that can kind of help reverse the psychology. Maybe I'm like a hopeless romantic when it comes to DeFi, but what do you think about maybe old coins coming back?
I think you're right about that, but I also think, to add some more hope to the mix here, Travis's one of his last tweets is saying like what he's saying has historically been a bottom signal. And I think there is some truth to this, right? Like sentiment is so poor right now. Where else do we have to go from here? And I think there is going to be innovation in this space, and there is going to be a narrative that we can't even predict that's going to come up and sort of lift us away. And there's going to be more innovation. It's just impossible to predict what that could be, right? Like before DeFi summer, it was very hard to predict that DeFi would do well. Like no one used Aave or ETH Lend at the time. People weren't interested. And then yield farming was kicked off and this whole new wave of innovation came. And then we had NFTs, which no one predicted or thought would happen. Before NFTs blew up, we had CryptoKitties, which no one really cared too much about and weren't valued too highly. So I think now is a good time to get involved. And I do think we're going to see waves of innovation in sectors we just haven't thought of before. Like all it takes is one. I've seen that a lot on Twitter, but it's so true. All it takes is one breakout successful game to spark a GameFi narrative and true innovation. All it takes is one new DeFi app, one new social app to hit. We just need one app. And I think that's very possible and very achievable.
Travis Kling does say at the end that he thinks, again, Trump might potentially bring some hope because if he wins, then projects can go back to trying to create value for their tokens instead of just making them worthless governance coins. My own feeling is that the space is in dire need of direction. So Galois Capital has posted this tweet here. He actually blames Twitter's algorithm. So when you're on Twitter, you have the For You tab and you have the Following tab. And I think Twitter just pushes automatically by default. Every time I refresh, it's always the For You. So this is like their recommendations. They want their recommendations to override the people that you're actually following. And he's saying, we're just being inundated with political content and things that are distracting from what used to be like a very concrete set of follows that people had. And we're all following the same people, and we're getting the narratives very clear, discussing them with each other, and we're, pinpointing exactly what they are. I don't want to put all the blame on the Twitter algo, but I do think that there's a lack of philosophy. I've said this. The bear market is a good time for philosophy in general, because that's kind of when you find the direction. And then when the bull market comes, you kind of stack on resources and you invest and you go in that direction. And we're kind of in this like mid bull market right now. I think we're having a lull and we could use some philosophy. So, people gave Bankless a bunch of shit for having Kyle Samani go on and talk his bags. And I think maybe they were right to the extent that, nobody pushed back. And we'll do it differently when Kyle comes on. But I thought it was great that Kyle brings some philosophical perspective, even if I disagree with him. He had a tweet, and this is what my hope of the week is. So Kyle Samani has historically been very anti-Bitcoin. For those of you who have ever read his letters or things on their website, he thinks that programmable money and then the most programmable money like Solana or the next one is going to become a store of value. And for the first time, he seems to be opening the door to maybe being wrong. And he's kind of wavering a little bit. If we can bring up this tweet here. So Kyle Samani here is saying that because when you look at a chain like Ethereum, there's so much stable coins and things in it that the US government potentially can have a lot of control. While if you have a meme store of value, Bitcoin, the actual co-opting is not there. Nobody can call Circle and say freeze the money because there's no tie to the real world. This is a purely digital asset. And I've not seen this before, but Kyle is saying that you can be a pure store of value asset, or you can be the world's greatest DeFi and payment rails. You cannot be both. because you need the lack of real world ties to be safe from government intervention. So this is interesting. He says the only question is, does anyone care about purity? We'll debate that with him when he comes on, and I think it's time to really start clarifying what monetary value means. What is a store of value? What gets monetary premium? These are things that I've brought up in the past, but I haven't had, enough of a focus to get to the bottom of it.
Jordi, you talked about ETH being community money. That never really clicked with me of what you meant by that. Maybe you can double click on that.
Yeah, so the stronger a community is and the more it grows, they can have a common meme and a common belief, and that belief can be, the main coin, right? Like for Solana is a pure meme coin. There's no revenue to it, but it is sort of like the the Eiffel Tower of that country. So when a community is thriving and it's growing, the money of the community, people are willing to use this as something valuable, and it means something to them. It's an important token for them. So when the community is weak, as we've seen, the Ethereum community has taken a lot of beatings. Community money gets weaker, and this is something. Yeah, you're right. It does need more clarification. Also, a lot of people in the chat in our last episode have been asking for more clarification on what I said, that Ethereum is not a macro asset, while Bitcoin is a macro asset. This is something I have gone into in the past. I've written threads about a few years ago. We are seeing Samadhi kind of start to see a little bit of this, why like Bitcoin is potentially like a snowflake and can be treated as a macro asset rather than a crypto asset. But these philosophical questions, I think, are very important to clarify now, so that we know the direction where it's to go.
Yeah, and I guess like, even looking at like the tweet number 8 by Samadhi, he's still kind of like bashing Ethereum, right? Because he's essentially saying you can either be a store of value asset, or you can be DeFi / payment rails, but you can't be both. And ETH right now is trying to be both in a way, like, ultrasound money plus also the world's like settlement layer, etc.
Yeah, so personally for me, it's made me want to go back to my writing days and my long form content. I'll try to write something on the plane. When I'm back, I'm going to have 7 hours on the plane. So hopefully I can put everything down and it'll stream nicely. I do remember 2 years ago, when did we have the merge? It was about 2 years ago now. I did an extensive long form piece. That was my last long form piece, so it's been a while. And I think it had a huge philosophical effect on the Ethereum community. Like, I was on Backlist doing a debate with David, and people can look it up. It was, sadly, I was correct. It was very prescient. I made several predictions, and unfortunately, they've all come correct. There was a lot of hype at the time that that we had this internet bond, that the yields would be like very, very high, 5-10%. And I said that after a couple of years, it would be down to 2% based on the design. We had this ultrasound money meme, and I unfortunately again predicted that we would never be this inflationary once L2s started having all the transactions. And now we're at like 1 Gwei. I think I predicted like 6 Gwei or something, which was, I remember Backlist guys were like astounded, like, what do you mean we're going to be under 10? And like, we're at 1 now. So what's wrong?
And because gas was consistently in like the 50s to 100, peaking, sometimes spiking to 300, like daily. It was an exciting time. I miss when gas was high.
So the last long form piece that I wrote was almost 2 years to the date, and it was at the Ethereum merge. And the vibes were very, very different back then, even though prices were not necessarily very different. So September 15th, this was when the merge happened 2 years ago, 2022. Finally ships. We have Vitalik here, long last. This was a counterpiece to some of the prevailing, excess optimism. And we have the ETH merger. He says, number 1, ETH will super cycle straight to 10K. It's not priced in at all. He says it's a triple halvening, deflationary supply shock. Staked ETH will be a yield sensation, real yield. And Number 4, Ethereum will be the one true chain to rule them all.
Oh my God.
So, I started kind of with obvious, buy the rumor, sell the news kind of thing. This was maybe a little bit predictable. Of course, we had a lot of people that had bought a bit too early. And here's a triple halvening. There was this belief that there will be a triple halvening. So EIP 1559, which I think actually is a very good design. Like, why not just burn gas fees? And if you scroll down the dragon, he says reduced issuance, which is good. And then, people thought that staked ETH would somehow be like off the market forever. And because it's staked, in Lido, it's as if like nobody can ever unstake it and sell it. And this was kind of dumb. So this was the dumb dragon here that I pointed out.
I remember watching the Binkless interview with you, and I think David was like, oh, staked ETH can't be sold. But then you're like, well, staked ETH, like wrapped staked ETH can't be sold. And he's like, oh yeah, you're right.
Yeah.
People did.
So I did a lot of analysis on the burn as well. And I predicted that these periods of huge burn we had in the past, from L1 fees spiking because of, like Bored Apes doing some sale or something happening that was so big. And once we moved to L2s, this wouldn't happen. So I did quite a lot of analysis. And like I said, I thought that we would maybe get down to single digit Gwei, which shocked people at the time. So here, yeah, like this is like these auctions here. The reality is we've gone even lower. We've gone to 1 Gwei, which even I could not have imagined. I don't know that anybody and any of us could have imagined.
I mean, this meme here was the one that really struck me. Let's move apps to layer 2 to be more user friendly. Yes, we can burn a lot of gas there. It's Padme. You'll be using ETH for gas, right?
Yeah, like all the sequencer revenue gets, kept. Like we saw Base. Somebody was posting the other day. They made like millions of dollars, and they paid like they made 2.5 million in fees just in August. Great business. They paid 11K. So after blobs, 11K to settle.
It's like, take everything about all the like big brain stuff out of it. From just a business perspective, you're basically giving all of your margin away, right? And you're letting someone use your application for free, not charging them much, and letting them charge a lot for using your application. It's just clearly a bad business.
Correct. And let's think about this though, because even on that podcast, I was saying that it's actually okay, because if you try to do it as a business and revenue, for Ethereum to be worth 200 billion on 2 billion of gas burnt, which was what it was at the time, now we're nowhere near that. It's still 100x multiple, and even for a good growth stock, 100x is too high of a multiple. So ultimately, you do need the monetary premium to be a factor. Otherwise, it doesn't make sense. Right?
The idea was that everyone's going to use L2s, and then either can, I guess, export the monetary premium, right, to these L2s, because if everyone uses L2s, then everyone holds ETH, and then there's more demand, etc. But unfortunately, that's not really happening right now. People are going to other chains and whatnot. There's not enough applications. But yeah, I mean, great predictions, Jordi.
This is the part that I guess like I had become bullish on, which was I thought that the community premium would get stronger, because even if there's all this dispersed, base here and blast there and all this stuff, as a community money, ETH could still do well because it's at the core, it's at the middle of everything. Like that's sort of holding everything together. But we're not at that stage right now.
One last thing I wanted to touch on in your article before we move on is you predict in 2023 that we'll see like a 3.2% yield on staked ETH, but 1.5% or so will be inflation, and then 0.25% to 1% goes to validator operators. What's so interesting is I just pulled up Lido. I haven't checked it in a while, even though I hold a ton of staked ETH. The yield is now about 2.8%. So pretty close there, which is interesting. And this number has pretty much just trended down, right? Activity has fallen off a cliff. And this is basically just the yield from validating no tips and no MEV.
Yeah. I think the yield was very accurate. I had all these like remind me in 1 year posts when I put that out on Twitter.
No.
Hopefully they can check now and see. So yeah, there was the staking yield, and let's just get to the end actually of this article, because the last narrative, which we have the
Sasan.
Sasano meme here.
And we love Sasano. This is not to pick on him at all. He's a great guy.
Yeah.
I made a point which, I've gotten tired of people repeating it now over the years or independently realizing it, which is what Samani just wrote. It's very hard to be both, to be everything. So like I concluded my last sentence in this article 2 years ago was, be a great Batman or a great Buddha. Don't try to be both. And it basically meant, if you want to design good apps and have novel use cases and be very friendly, if you want to focus on being a store of value, that's also good. Trying to do both at the same time gets very difficult, and you run into inconsistencies.
Well, that was a fun segment of telling the audience why Jordi was right the whole time.
How do you feel, Jordi?
Sad. I'm always too early.
Well, Jordi, it sounds like you see here you've crowned yourself. You've given yourself the Medal of Freedom here. You were right the whole time, and I'm glad we got to finally tell the audience that.
Too early. So, all being said, I'll try to force myself to write a new deep dive think piece. People don't realize how long these things take to write and edit. It takes a couple weeks of full-time focus to be able to get this out.
Two quick observations on that. One, I remember when I first read this before we were doing the show, and I remember being upset, like emotionally, because I was so attached to ETH and not taking any action, but also like seeing the validity of some of your points. And then eventually I did come around to this sort of before what you had posted became mainstream. But I wanted to ask you, Jordi, you wrote this thesis. Did you take any action on it? Was that a time when you swapped ETH to BTC or ETH to Sol or ETH to USDC? Or was this just like was there any action steps you took after this?
Yeah, so I did have a BTC overweight at that period, after the merge, kind of expecting a little bit of a reversion. After the BTC ETF, I did expect that we would get an Ethereum one because, it ticks all the same boxes. It just made sense. And that the same hype that Bitcoin had would translate in possibly in a more powerful way, because Ethereum is a smaller asset. It takes less to move it. And it also feels quite dispersed. So there's not like a ton of huge whales that can keep the price down. Or so we thought. And hopefully that was true. But yeah, as we talked about with Huss, possibly the ETF came too soon before the market had digested the last one. And, I do believe that we are near the bottom now for ETH. Like, people have realized the problems, and I actually became bullish. So remember last episode, I said Justin Drake, instead of coming on the show, you told me to go to Reddit and look at their AMA.
Yeah.
So I went and looked at the last one they did. So from the 8 months ago Reddit that the Ethereum Foundation did, there was actually like some pretty good reads here. So somebody asked, how will Ethereum tackle the liquidity fragmentation? The whole year since this was written, this has been a big issue. Everyone's been talking about this. And this is kind of what's allowed Solana in the last 8 months make a lot of ground. And there's some responses here going into details, and it looks like they have a pretty good plan, even if it's going to take a while and it's slow. But if we look at it, they believe that, I did not know this, the long-term plan is for the L1 actually to become the sequencer. Did you know this, Justin?
I did not, no.
Yeah, no one's talking about this.
We need a marketing budget for the EF.
Yeah, we have seen based rollups brought up, and it sort of ties in here. So basically, based rollups will use the L1 as a sequencer, right? So that kind of decides the transactions that get put into the block. So imagine basically that you have all these L2s for execution, but they're ultimately relying on Ethereum's base layer for sequencing. So I don't know exactly what all this means. It was very interesting to read, but my point is, there does seem to be like some plan here, and it'll take a while, but things can get better.
Yeah, but it's also kind of like the Vitalik meme that you had in your article of like, it finally ships and he's like 80 years old. It's like we don't really know when it's going to ship and what type of shape it'll take. But I guess it's good that, I didn't think that, or I didn't know that the Reddit AMA was that.
Let me ask you this, Jordi. So the EF is doing a lot of this development, the majority of it. There's a lot of funding. I think we saw a few weeks ago $100 million a year, which is great, and nothing against that. But if the EF was run more like a corporation, right, and there were deadlines and KPIs and OKRs and people could get fired instead of this like very much an academic air about it, right? Like the EF to me strikes me as like a university with tenured professors and they're researchers and they're more artists and they shouldn't be disturbed. But if that model was more like a corporation, sort of like how Solana's running things, like certainly our timelines would get better. We would have more competitive pay, more competitive engineering prospects, deadlines, timelines, etc. That's really all I'm pushing for. I think that would be a huge boon for us, is if the EF was run more like a corporation.
But then ETH would be more of a security, right?
Well, we got the ETF, so let's just run it back. Who cares?
We're good now.
We got it. Yeah, we're good.
We're good now.
Yeah, exactly. Now we don't need this obfuscation of decentralization, right? Because it wasn't that decentralized. The EF did control this, and Vitalik's word was very powerful in our space. But now that we've proved ourselves a commodity, let's just go all in.
Look, like Ethereum Foundation, Ethereum feels quite European. Obviously, there's a lot of Europeans involved in the thinking behind it, like a lot of European mentality around the socialism of it. And I would say Solana is much more American. It's a VC coin. It's very entrepreneurial, it's made for business, and it's very effective at making money for people. So you see the stark philosophical differences and cultural differences there. All right, so let's get to pasta of the week, guys. This was a week with very strong pastas. Maybe when the vibes deteriorate, the pastas get better and better. But we even have honorable mention before we get to our pastas. Honorable mention to Eric Wall and Iggy for I've been very entertained. So apparently there's going to be a debate in Singapore between the two of them discussing celebrity coins. I think this is a fantastic idea. I'm actually excited. I might show up just to watch this. But for the parliamentary motion, this House believes that celebrity coins are strictly bad. Eric Wall and Iggy will take a shot at a debate, and the two of them have been going back and forth on Twitter. It's been insane. Let's show some of these tweets. So, Eric, of course, has this. Yeah, he started with IOTA 2017. He's destroyed them. They're both fired. IOTA's from number 5 to number 100. Then Do Kwon, he got into I think Do Kwon called him poor. Like he was the one that he was calling poor. Lost $60 billion, awaiting extradition minus 100%. And then, one that I've piled on, which was Richard Hart, rest in peace. He's still alive, but evading capture in Finland or whatever he's doing. And
is he really hiding?
Yeah. He's on the run.
Oh, God. I'm not surprised. Todd Bod wins.
So here we go. So Eric says, can someone talk sense into this woman before I end her entire existence?
But look at this tweet from Iggy in the very bottom. I invited Eric to my party in Singapore. He told me 35 women in assless chap scares him and asked if I could bring his abacus for comfort. If he could bring his abacus for comfort.
Yeah, let's show a couple more of their back and forths. Iggy had some nice responses as well. So she presents Eric as this guy, he's got his sock here ready to go. He's getting very excited in front of his computer. And then we see what he's looking at. And it looks like it's some spreadsheets. Like he's just like nerding out to spreadsheets. Is that?
Yeah, he's like, fundamentals gets him going, Meme coin's bad. Spreadsheet good. PE ratio good.
Well, you'll have to tell us how the debate goes in person, Jordi.
But yeah, these are great. But let's see what you guys have. So Taiki, you want to go?
Yeah. So I saw this a couple days ago. So I think Euler Finance, they're launching their V2, and this is kind of their launch video. If you can go to like 24 seconds or something, they kind of go over their audits, right? It's like all the companies that audited their project, and if you could press the play button, audited by almost everyone except Surdic. That's bullish.
I'm just waiting for the Surtic alerts tweet to happen. Like, Euler missed it. There's a bug.
They're
It's ratio.
10 million exploited again.
Yeah.
But I just thought that was funny.
Pretty
Audited
good.
by everyone except Cerdic.
Justin, what do you got?
Well, listen, the drawdown's not been that bad. It's just been a little summer chop, right? Who's got a problem with just a little summer chop? It happens every summer, just a little chop. But here we have the summer chop pictured. BNB down 13%, BTC down 16%, BTC Sol 22%, ETH 30%, near 43%, and the list goes on. It's not just summer chop, guys. It's a little bit of downward pressure. So I thought this was hilarious.
Man, this is
sad.
we're trying not to be too copy. That's a little bit copy. All right, guys, I'll share my pasta. We have to put this video up. I was literally in tears. Regular viewers of our show, we brought up some of the DWF price moves in the past, but this literally had me in stitches. So the pasta is called How It Feels to Have a DWF coin. And we have a shrimp here. So nice. Price going up. Boom.
Oof. Is that acupuncture?
Yeah. Feels so nice.
Uh-oh.
Uh-oh.
Oh, no.
No. All right, we can stop it here. But that's what these charts feel like.
Jordi, you're
Yeah.
a gift machine. I noticed you love gifts.
I love gifts. As you saw from my blog post, I can't write a serious blog post without putting a meme or a GIF every 5 lines. I lose attention without it.
And so do we, so it's helpful. It works. Before we sign off, we should announce, so we have the party that you guys heard about at the start of the episode, but also at Token 2049, we're doing a live recording of the podcast. It'll be on the official schedule, and we'd love to see you guys there. We'll hang around after the show if you guys want to meet us and chat, if you can't make it to the party. So that should be a great time as well.
Yeah, anyone who's a token, please come by, and we'd love to have you in the audience. Cool, guys. I think we managed to strike the balance, and hopefully we gave some food for thought without being too depressive. We'll see everybody next week. Take care.